Okay, I'm sorry, it was some technical issue. So let's continue. We have done two parts. Now we will move towards the third part of the question. It states estimates the total value which WESTPARLEY shareholders will gain from acquisition of Matterverse. What is the value which WESTPARLEY shareholders will gain from acquisition of Matterverse? Okay, so I will be doing this requirement now. Okay. So estimates the total value which WESTPARLEY shareholders will gain from acquisition of Matterverse company. So total value which shareholders will gain from acquisition of Matterverse company. Now it's not just about Matterverse Tech, what value they will gain by acquiring Matterverse company. Now, once Matterverse Tech has been sold, they will be selling. WESTPARLEY estimates revenue from home will be 43,260 million the first year, will grow by 3% where 2 to 4, profit margin 6%, TAD equal to working capital investment and assets 630 million. Annual growth rate of free cash flows will be 2%, as well as the free cash flows, they will get the post-tax synergies. Okay, so obviously the additional value if they acquire Matterverse company. So let's start. Value of Matterverse company. If, what was the name? I forgot. WESTPARLEY. Acquires it. So by the looks of it, it seems that it's a free cash flow. So it's running till 4 years. Okay, free cash flow is sales. Less, obviously WACC is given, so we need ACCA F2 company. TAD, cost of goods sold gets less. We get operating profit, then interest. It's 0 in ACCA F2 company, right? Because we have WACC, we don't have K. You get PBT. Then tax. Add back TAD. Less investment NCA. Let's write add and less as well. Sales less. Less cash cost, sorry. Operating profit, interest, so we get PBT. Then we pay tax. Okay. So since K is also given, if you want to use FCF to equity, you can mention an assumption and write, but if it's back given, it's better to use FCF2. Come. So let's start. If they acquire WESTPARLEY, acquires Metaverse company, additional value will be created. So firstly, if they acquire, what value they will get. So if they acquire, revenue will be 43260 million per year, first year, and 3% per year. So in first year, it's 43260, and then it will grow by 3%. So D4, steric 1.03, and you can continue this. Okay. Now, less cash cost in TAD gives operating profit, but operating profit is 6%. So you can just skip those and directly reach at operating profit, which is 6%. So this will help you eliminate those above two rows, because deduct that and get operating profit, directly you get operating profit. It's D4, steric 0.06. So interest doesn't come. You know that if we are FCF2 company, interest doesn't come. You get PBT, which is the same. Less tax, 28%. So what is the 28% tax? It's D9, steric 0.28. Add back TAD and investment in working capital are same. So you can write 0, right? Because they're same. One is deducted and one is added. So no matter you write 100, 100, 200, 200, 5,000, 5,000. One 5,000 is added, one is deducted, it's same. Okay. Less investment in NCA. So investment in NCA states 613 yen 1, and then 0.5 for every dollar increase one in sales revenue. Okay, so in year one, it's 630. So minus 630. And then 0.5 for $1 increase in revenue. So If you see how much the revenue is increased, it's E4 minus D4. This is the increase in revenue, 0.5 increase in that. Okay, so it's 649. Okay, you take the difference and multiply by 0.5 because sales increase, 0.5 would be working capital. Here, sales increase, F4 minus E4. This is the increase in sales. Whatever increase in sales is, 0.5 is the working capital. And here, sales are increased by G4 minus F4, 0.5. Okay. This gives you FCF2 company. So it's D9, sum of D9 to D13. It's written that after 4 years, the growth rate of free cash flow will be 2% for the foreseeable future. So from 5 to infinity, the free cash flows will grow by 2% for the foreseeable future. So it's G14 increasing by 1.02. Okay. Discount rate WACC is 10%, so 0.909. For 5 to infinity, you have been told to take in my classes the last discount factor, that is 0.683, the last discount factor, over WACC minus G. So WACC is 0.1 minus G 0.02. This is for perpetuity factor, last discount factor over WACC minus G. So multiply that to get value of company. So D14. We add them. So total present value of FCF that demonstrates the value of a company is going to be the sum of all these. D16 to F16. 15880. Now this is not that my requirement is fulfilled. Okay, this is you need to pay attention. This is not the requirement has been fulfilled. Okay, the requirement was asking what is the total value which Vesper's shareholders will gain from acquisition of Matraverse? So obviously, if you acquire Matraverse, you will get Matraverse, the sales, the cost. So I've calculated the value under FCF that if we acquire Matraverse, these are the sales, these are the costs. So we will get this value. Okay. Together with this, there are some synergy benefits as well. So synergy benefits will be for 3 years. And the synergy benefits are 700, 750, 780. Since they are in future years, the synergy benefits, you need to multiply it with discount rate, obviously to convert into present value terms, 0.909, 0.826, 0.751. Present value D22, D23. Total PV of synergy benefits, sum of D24, F24, 1841. Again, my requirement is not over yet, but I want you to concentrate. The question is asking additional value for WESTPARLEY shareholders if they acquire Matraverse. If they acquire Matraverse, they get Matraverse, the future company. So the present value of future FCF, the value 15880, plus they get the synergy benefits 1845, 1841. Now, I'm just wrapping it up. If WESTPARLEY acquires Matraverse company, they get value of Matraverse, that is 15880.08, plus they get the synergy benefits as well, that's 1841.5. Plus if they acquire Matraverse, this is only from home, okay, they will sell Matraverse tech. From there they were getting, just a second, $5054. Remember, this was the value they were selling in, 5054. So this is the total benefit they are going to get if they acquire Matraverse company, right? This is the total benefit they will get if they acquire Matraverse company. 15880, the home business, 1841, the synergy, and 5054. They will get approximately 22775 if they acquire Matraverse, but they have to pay something to equity holders, and they have to pay the Matraverse debt as well. How much they will pay to Matraverse debt holders? The market value of debt is 6,500. They have to pay that, and the equity value is 12,500 is the equity value, but they will have to pay 10% premium to their shareholders. So 12,500 into 1.15, they have to pay 14375 to them as well. Now, if they are getting a benefit of 22,775, but they have to pay 15% premium to the equity holders, 14375, and 6,500 to them, the additional benefit created by acquiring them will be 1,900 million. This is the answer of part C, because you have to think about some common sense that if we acquire some company, you're getting their home business. So what is the value of a home business? You calculate it through FCF. They get synergy benefits. You calculated synergy benefits, and you will sell the tech business. So you get the value of that as well. So all these are benefits less the premium you have to pay, and that is zero. Okay. So any questions you can ask, else you can copy. Okay, so I think it's been approximately now 2 hours, and you have enough practice of some of the key areas of VAC and mergers and acquisitions. Okay, now there are only some theoretical parts left, which you can read from the answers. So we will end up with this session. And if you have any queries regarding this, you can always message me. We have made the group as well. Thank you. Bye-bye.